Do you think gold will be revalued? And not in so many direct words, she said, yes, I do. James Rickards here says 24,000. Now, I'm not saying that's going to happen. Who would it benefit? Every central bank on the planet who's been buying it voraciously since you and I started talking 4 years ago. Every central bank is gobbling up gold. It would benefit every single one of them. Why 24,000? He has a formula of dividing M1 into the amount of gold, etc. But every $4,000 increase in the price of gold would give the Treasury general account $1 trillion free and clear. And the way that that works, without getting too deep into the weeds, is that the Treasury would issue gold certificates to the Federal Reserve for that amount.
Gold's meteoric ascent is broadcasting an unmistakable signal. The foundation of global finance is cracking under unprecedented strain. With central banks printing money at historic rates and traditional safe havens failing, gold has surged over 27% in 2025 alone, building on last year's stunning 40% rally. According to precious metals expert Andy Schectman, this isn't merely another cyclical upturn. In his latest assessment, Schectman argues that a dramatic revaluation of gold to $24,000 per ounce, as proposed by economist Jim Rickards, would not be an abstract monetary experiment but a necessary recalibration of America's balance sheet. Such a move would restore the 17% gold-to-debt ratio last seen in the 1970s and inject trillions directly into the Treasury's coffers without issuing additional bonds. Schectman exposes the glaring weakness in current institutional thinking. At the same time, U.S. investors cling to legacy assets like treasuries. Central banks worldwide are aggressively accumulating physical gold. The numbers tell the story. Treasuries managed just a 4% gain last year, while gold soared 40%, and this year's pattern is repeating. The dollar's simultaneous 10% decline, even amid rising interest rates, reveals the hollowness of traditional monetary assumptions. As Sprott Asset Management CEO John Ciampaglia observed, treasuries are simply not providing the same safe haven experience they once did. This represents far more than portfolio rebalancing. Schectman sees this as gold's remonetization, a systematic unwinding of decades of financial engineering that divorced money from tangible value. When nearly half the government's reported assets consist of student loans and military hardware, gold's appeal as genuine collateral becomes undeniable. The global pivot is accelerating in real time, and savvy investors aren't treating gold as speculation. They're embracing it as essential protection against monetary chaos ahead. If you want to understand where the smart money is moving before the crowd catches on, make sure to like this analysis, share it with fellow investors, and subscribe for more insights that cut through the financial noise. The transition is happening now. Don't get left behind.
I think the weaponization of the dollar had profound effects globally. Not only the dollar, but more relevant, the Treasury market. I think we are seeing, this isn't a word, but if it were, it would be called de-treasurization in favor of things like gold, which has not only doubled its performance over the last 25 years. Look at last year as an example, gold up 40%, Treasury up 4%. You look at this year, gold up 30+%, the Treasury up 1.5% so far on a year-over-year basis. But the dollar's down 10%. The dollar is falling, interest rates are rising, gold is going higher, but we see a trend of repatriation and delivery, whether it be the commercial banks repatriating their gold from the Bank of England and the New York Fed, or massive players draining the LBMA and huge deliveries coming off the COMEX. For the first time ever since November, the United States is a net importer of gold. Who is importing nearly $100 billion worth of gold since November into the United States, into COMEX, most of it leaving the exchange? So if I were to encapsulate everything I just said, it's a shift away from Western dominance. It's a shift away from treasuries. It's a shift away from dollars in favor of commodities traded over a blockchain network. That's ultimately where I think we are going. Whether it be what we see happening in China with the internationalization of the yuan and the ability to take delivery off of a series of now multi-jurisdictional hubs for the Shanghai Metals Exchange that they're building, and first one in Hong Kong, next one in Saudi Arabia, and a slew of them throughout Asia and Africa and ultimately South America. Or whether it be what we see here on COMEX, huge deliveries, metal coming in and coming off of the exchange. All of it points to the same thing to me, and that is a new system, a gradual reset, a system that is moving away from what was to a new system that will be dominated, as Zoltan Pozar calls it, Bretton Woods 3, commodities and blockchain, and the marriage of those two things, if I had to guess, is where we are moving in what is now not such, it's moving at a faster speed. It started out very slow. It's starting to accelerate. And I think by this time next year, it will be much stronger. I really do. In fact, one of the slides I played today in my speech, the last slide, was Judy Shelton on my show, who was Trump's nominee to run the Fed in 2016. Many think she'll replace Powell this time. And she said to me, and I played the slide on my video with her, that she believes, after discussions with President Trump, that on July 4th, 2026, he will issue, she says he's going to make a huge deal of that, the 250th year anniversary of the country, that she believes he will issue starting with 50-year treasuries denominated and redeemable at maturity in gold. So I think we're moving into a system where gold is being remonetized, being brought back into the monetary system, and a move away from promises by a country that is insolvent and has done too much to anger the world through weaponizing of its systems. Well, Lavrov says we're opening up to non-BRICS nations. Think the Belt Road. Think the Shanghai Cooperation Organization. Think of all of these countries that comprise pretty damn well near 90% of human population. 3 of the 4 largest nuclear arsenals. The center of manufacturing with China and Vietnam as the 48th country that just applied to the BRICS. Think of all of this stuff. And now you open it up to these players where you trade in your local currency to stimulate your own economy. You don't have to go back and forth through the SWIFT system into dollars. You settle imbalances in gold through a series of multi-jurisdictional metals facilities where every country puts a little bit of their gold in all of these hubs. And now you settle any imbalances once a quarter or once a month in gold instead of using treasuries. In essence, gold isn't replacing currency. It's replacing what backs the currency, treasuries. Yeah. So every country uses their own currency, which makes them keep their monetary house in order and settles imbalances in gold. And this, to me, is the beginning of a new trend. This is the beginning of a reset. Yeah. It's a reset that's slow moving. Everyone thinks reset means like a video game. You press reset and it starts over. No, reset has already been pressed, but it's the slow moving chessboard, all the pieces being put into place. So when it finally does actually fully reset, there's nothing the West can do about it. And I believe that in my soul. I just gave a 45-minute presentation that encapsulates that. Kind of hard to do right here, but everything I'm seeing, everything Steve tells me, that's where we're going. Capital ratio says, well, it's got to be stock or bonds, but the liquidity ratio on your balance sheet says, yes, it's as good as cash, it's as good as bonds, and has a 0 weighting in terms of risk assets. So what did it mean? It just simply means that gold is gradually being reintegrated into the system and being acknowledged by the central banks. You know, he also, his largest holding was gold when he ran his hedge fund. And he also said, although he's backed away from the gold part of it, and I think someone said, what the hell are you doing, Scott? Because he said, we're going to remonetize the asset side of the U.S. balance sheet. Look at the U.S. balance sheet. I would challenge everyone to Google United States government balance sheet. What you will find is $5 trillion in assets backed against $200 trillion in liabilities. Of those $5 trillion in assets, the largest asset, the United States government, not the United States government, the largest asset is student debt. Over 40%, about $1.5 trillion, is the single largest asset in the United States balance sheet. Number 2 is military bases, guns, bullets, aircraft carriers. Now, these 2 things you're not monetizing. Yeah. Okay. The 3rd is land. Okay, you could put some hotels or national parks or amusement parks or whatever. You can monetize, but what else? I don't know. So everyone assumed he was talking about gold. Gold is held on the United States balance sheet. You can't make this shit up. Pardon me. I'm sorry. You can't make this up. It's called the gold revaluation account. That is the name of the account that gold is held. That's the name of it on the U.S. balance sheet, the gold revaluation. Everyone assumed that's what he was talking about. And he kind of said, no, that's not what I'm talking about. I think someone got to him and said, Scott, what are you doing, man? Because the U.S. has become a net importer of gold since November, erasing a long-standing trend of being a net exporter. Since November, we've imported, that they've reported, just shy of $100 billion in gold. Since November, month over month over month over month of larger and larger and larger deliveries into COMEX. Most of it leaving the COMEX. Who's buying it? Where's it going? In May, it was the largest delivery ever in the history of the COMEX market in both gold and silver. Over $8.5 billion worth of gold was delivered on the May contract. Who's got that money? There are people standing for delivery in this country that never, ever, 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 ever did before. And who is it? Then you get Trump, who comes out and says, he who has the gold makes the rules. He said that on a tweet on Easter Sunday, the golden art of negotiating. And then you have Judy Shelton, who I just had on my presentation, the last slide. Judy Shelton, I interviewed on my channel, and she was Trump's nominee to run the Fed in 16. She didn't get confirmed due to partisan politics. A lot of people, including myself, believe she will be number 1 or 2 in the running to run it this time when Powell leaves. Her book, As Good as Gold, says the advocates for 50-year treasuries, starting with 50-year duration, redeemable at maturity in gold. On my podcast, I pressed play, a 1-minute segment for everyone to hear. She said, Trump and I have had discussions when I was part of the transition, and we've talked about it a lot. And he's gonna make a very big deal of next July 4th, 2026, the 250th year anniversary of the country. And she said flat out on and I played it for everyone here, it's my belief that they will issue 50-year treasuries redeemable in gold. Now, the first step in doing that would be to bring back all the gold. We become net importers month over month, massive amounts. Someone said to Scott, what are you doing, bro? You're not supposed to say this yet. Yeah. And that's why he backtracked off of, well, I wasn't talking about gold. Yeah, right. You were talking about gold. There ain't anything else they can monetize on the balance sheet. Maybe some land, some parks. Okay, great. That ain't going to do it. Yeah. So, and then I said to her, Judy, do you realize that gold is held in the Western balance sheet in an account called the gold revaluation account? She says, yes. Do you think gold will be revalued? And not in so many direct words, she said, yes, I do. James Rickards here says 24,000. Now, I'm not saying that's going to happen. Who would it benefit? Every central bank on the planet who's been buying it voraciously since you and I started talking 4 years ago. Every central bank is gobbling up gold. It would benefit every single one of them. Why 24,000? He has a formula of dividing M1 into the amount of gold, etc. But every $4,000 increase in the price of gold would give the Treasury general account $1 trillion free and clear. And the way that that works, without getting too deep into the weeds, is that the Treasury would issue gold certificates to the Federal Reserve for that amount. The Federal Reserve would then safekeep the gold and would give the print money and give the Treasury, in this case, $6 trillion free and clear, that they could use to pay down the balance sheet or to issue treasuries, whatever it may be. Now, the Fed does not have access to that gold. It still belongs to the Treasury. What they do have claim on is the fiat value of that gold. That's what those certificates.
While Western investors debate gold's next move, China is quietly executing a master plan that could reshape the entire precious metals landscape. The world's largest gold producer has unveiled an aggressive strategy to increase domestic gold resources by 5 to 10% and boost gold and silver output by over 5% through 2027, according to China's Ministry of Industry and Information Technology. Industry insiders, such as Sean Kung Fu of Dolly Varden, report that Chinese entities are flying across Latin America, purchasing door bars and concentrate directly from miners at above-market prices, a coordinated effort to secure physical metal before global supply chains tighten. As Andy Schectman explains, those who understand the shifting financial landscape are quietly accumulating massive positions in precious metals. While the public remains passive, China's strategic positioning comes as central investment banks finally catch up. Goldman Sachs has raised their year-end 2025 gold target to $3,700, projecting $4,000 by mid-2026 with an extreme scenario of $4,500. JP Morgan follows with $3,675 for Q4 2025 and $4,000 mid-2026. While their bull case suggests $6,000 by 2029. Let's get back to the interview.
You know, China's going all around the world. They're the largest producer of gold in the world and number 2 in silver, and they're going all around the world. Go talk to Sean Kung Fu here, Dolly Varden. He'll tell you that they're flying all around Latin America buying doré and concentrate directly from the miners, which disintermediates the marketplace entirely, and sending it, paying double what the West will, sending it back to China to refine it. And this is the largest producer of gold in the world and the second largest of silver. So why are they going and buying doré and concentrate, paying over market price and sending it back to refine it if it's just an archaic relic of the past? The point of it is that it's the same reason why you saw Saudi Arabia and China get caught lying about how much gold that they've imported on the import-export numbers. Oh, sorry, we made a mistake. But if the People's Bank of China buys gold and it's 999 pure, it has to report to the IMF. But what if they buy Dorian concentrate that isn't? Well, they don't. What if the PBOC uses proxy banks, like a commercial bank, to buy it in the form of a sovereign wealth fund on behalf of, well, they don't need to report that either. And what if the People's Liberation Army buys it, which they buy tons? They don't have to report it. So that's why you're seeing articles come out saying that these numbers are 10 times understated to what the central banks are buying. My point to you is the central banks know the playbook. They're gobbling it up. So revaluing gold would benefit every one of these central banks. And yes, it would benefit those that we could argue are maybe borderline adversarial with us. But at the same time, what choice do we have? How do you get people to want to take our treasuries, which we need because our debt keeps growing? How do we get them to take our treasury when we're broke, we're insolvent, we're not fixing? Doge came up with 80 billion in savings. That's 36 hours worth of money printing in this country. Nothing. How do we get the world to want to take our treasuries? Well, we import all the gold, we reshore all the gold, we let the price rise, maybe revalue it, peg it to a 50-year treasury, which gives us more runway and it's redeemable upon maturity. Now, she said that he would also issue shorter denominations later. But the point of it is that gold, in my mind, 1,000% is replacing the treasury. That is what it's not replacing the dollar. Local currencies, all these other countries ultimately will do that. But what it is replacing is the treasury, which is, in the scheme of things, more important to the government, to this country, to a country massively indebted than the dollar is in being used for commerce. I think it's one of these moments we'll look back on, your children will look back on and read the history books of what once was the empire of the United States, where everyone took dollars and used treasuries to save. And it will be a new system where it will be about transparency, blockchain technology, and commodities backing it with the ability to stand for delivery. No more promises that go unfulfilled. No more one country rules the roost. It'll go about from being one country or one system to a whole bunch of countries using their currencies, which mandates fiscal responsibility and settlement in gold through a multi-jurisdictional chain of vaults that then gives credibility to the whole system, and veracity and instant settlement and instant auditing on a digital blockchain net. 100%. And it's not, don't look at the price. Price is being used as a tool of misdirection. Eric Young on Twitter, one of my favorite, King Kong on Twitter, like YEUNG, he talks about, he's in Hong Kong. He says, China's doing the same thing. They're shorting the silver price in the West and buying it up everywhere else, where it doesn't have the impact on the price. They're playing the long game. They're using the suppression of the Western paper market the way that all these countries are, who are now sophisticated, coordinated, and motivated, and are using the Fugazi manipulated price of massive rehypothecation of gold and silver futures contracts to stand for delivery. Know what's coming, buy large amounts of gold. And there are those that are still looking and understanding the value found in silver. And business is very strong, but nowhere near as strong as it should be, because people don't react. That's why so few people ever succeed in investing, because they have to see it with their own eyes. The guys like Rick Rule putting on this show, I'll tell you, every time he's made money, he's been buying when no one was buying it. And he will tell you that the most money he's ever made is when there was blood in the street and everyone said, you're an idiot for owning it. And look at him now, he's a centimillionaire, and putting on this show. My point to you is that if you think mom, pa, retail investor know where things are going over the institutionals, then buy NVIDIA and Bitcoin and dump gold and silver. If you think otherwise, then do what they're doing. And that is to mitigate exposure to the legacy system, whether it be the banks or the equities, and to buy commodity. That's what I see happen. And it's a shame that our legacy media doesn't speak this way. Instead, they would have us all believing that the road to retirement is only paved with stock certificates and mutual funds, and I think it's a big mistake. So great value to be found in metals, lowest premiums I've seen, great availability, but that changes like that. Because at the higher level, the bars are becoming impossible to get. The bars, the 1,000-ounce silver and the 100-ounce gold or the 400-ounce gold, those are being gobbled up. Well, those are the bars that are used to make the coins that the sovereign mints make. So it starts up here, it will trickle down. You'll wake up one morning, something will collectively trigger the collective psyche of the public. They'll want to buy it, and overnight it'll all be gone. And I do believe. 1,000, not very much. Platinum is gaining more attention. Okay. U.S. Mint hasn't made platinum eagles in going on 3 years now, and so platinum in and of itself is hard to get, high premiums, but the argument is the same as it is for silver, very similar. I would say there's great value. I mean, when you look at platinum and palladium, the major hubs of mining, of resource, is in South Africa and in Russia. So you're talking to the BRICS members. It's a smart play. I would buy platinum right now. But to me, the world thinks of wealth, money, it's gold and silver. I mean, you go back, gold was mentioned over 400 times in the Bible, silver a couple, 300 times. Together, it's like 700 times that they were mentioned in the Bible, the two of them together. And, uh, you know, you don't see that in platinum plating. Platinum's 30 times more rare than gold. It's a compelling story, and I think there's great value in it. It's just hard to get right now. There's very little supply, even though the narrative and the story is smart. To me, I'd buy gold. I'd buy silver first, then gold.
Andy Schectman's perspective offers a sobering counterbalance to the prevailing narrative that dollar dominance is inevitable and unstoppable. Instead of assuming American financial hegemony will continue indefinitely, Schectman warns that global monetary dynamics are far more fragile and far more volatile than most realize. He points to the fundamental imbalances that still permit gold revaluation scenarios as extreme as $24,000 per ounce, particularly during periods of fiscal crisis or geopolitical realignment. These aren't wild predictions, but mathematical possibilities that informed investors must consider. Historical precedents, such as the 1970s gold-to-debt ratio of 17%, remind us just how quickly monetary systems can be restructured when pressures reach a breaking point. Gold may be reclaiming its monetary role, but Schectman insists it's also the metal of systemic transformation. In actual crisis scenarios, traditional assets can collapse while gold prices surge, catching investors off guard who cling to legacy positions just before monetary resets. That's why his message carries such urgency. Gold's fundamentals remain rock solid, but its ascent may unfold far faster than conventional wisdom suggests. What are your thoughts on gold's emerging role in reshaping global finance? Drop your thoughts in the comments, like and share this video, and don't forget to subscribe and hit the bell icon. Thanks for watching.